5 last-minute deductions you could still take before you file your tax returns. The tax deadline is coming up fast, but here's some good news. You could still lower your tax bill. Now, if you haven't filed yet, here are 5 last-minute tax deductions that could save you thousands before you hit the submit button. Number 1, write off your business expenses. Business expenses that you might have forgotten, right? If you're self-employed, real estate investor, or small business owner, go back now and check. Did you forget any business expenses? Things like home office deduction, software and subscriptions, or what about meals and travel? And of course, we all have marketing related expenses. Now, it's important to understand that even if you pay some of these expenses with your personal card or personal account, you can still write them off as long as they were legitimate business expenses. Also, you can contribute to your retirement account. Did you know that you can still contribute to your traditional IRA, Roth IRA, SEP IRA, or even a solo 401k for last year? This is one of the best ways to lower your taxable income. The deadline, typically April 15th, or for small businesses, you can contribute all the way up until you file your tax return. And for business owners, again, even self-employed, you might be able to contribute close to $70,000 and take a write-off as a result. And for those of you who are real estate investors, the best part is you can even use that money for real estate through a self-directed account. Now, here's a tax tip. If you contribute to a Roth IRA, you won't get a tax write-off this year, but that money does grow for you tax-free forever. And what's better than a tax-free bucket of money, right? Number 3, you can fund your health savings account. If you have a high deductible health plan, you can still put money into the HSA for last year and take a tax deduction on your tax return as long as it's before April 15th. It's one of the best strategies because your money goes in tax-free, it grows tax-free, and could even be withdrawn tax-free in the future as long as you use it for medical expenses. Now let's talk about some real estate specific strategies. If you own rental properties, you might still be able to take advantage of some of these amazing tax strategies. So bonus depreciation. If you own rental properties, bonus depreciation could potentially save you a ton in taxes. You can make that decision on your tax return. Also, to supersize that, cost segregation studies, where they break out the building component to get even faster depreciation. And let's not forget real estate professional status if you meet the IRS criteria, or claiming the short-term rental tax loophole. These can all still be applied before you file your taxes, so make sure you talk with a tax professional if you haven't looked into them yet. These are some of the most commonly overlooked tax benefits. Also, last but not least, you can change your LLC designation to get the most tax savings. So if you're someone who's flipping, a realtor, and you've earned that income in an LLC, you still could potentially make an election to file those tax returns as S corporations. Now, what's the benefit of doing that? Well, if you file as an S corporation, you could use the salary and dividend split to potentially reduce self-employment tax. So as an example, if you're someone who did fix and flips and you netted $100,000 of profit last year, filing as an S corporation rather than an LLC could save you up to $7,000 in taxes or even more. And you can make that determination all the way up until you actually file your tax returns. So as you can see, there are still a lot of things you can do before you file your taxes to make sure that you are saving and capturing these last-minute tax benefits. If you like this video, be sure to subscribe and hit the like button, and I'll see you in the next one.